This free TradingView indicator uses historical data to predict the next candlestick. In fact, this indicator is so well made that it received an editor's pick reward from TradingView itself. In this video, we will take a look at exactly how this indicator works, but more importantly, we will of course take a look at exactly how to use this indicator. But guys, I don't want to waste any time here, let's dive right in. So first of all, to open up the indicator, we go up to the indicators tab here in TradingView, and we want to search for breakout probability. And we want to use this indicator from Sireman, and as you can see, it indeed got an editor's pick award. And as you can see, right now the indicator appeared on our chart. We can see two percentages. It says 69% and 29% right here. But as you can see, this indicator right now doesn't look anything close to what I showed you guys in the intro. And that is because we do need to change some important settings here to make the indicator effective. So what we want to do here is that we want to go up to the indicator and press settings. Then we want to go here to the inputs tab, and this window where it says percentage step is very important to understand, because right now we're looking at a short-term time frame. As you can see, we are on the 5-minute time frame right now, and when we are on a short-term time frame, we need to make the percentage step shorter. So let's first change the percentage step to 0.1 and click OK. So as you can see, now the indicator looks much better. But you of course need to understand, what does 0.1 mean here? Well, it basically means that every step in between these lines, you can see these lines right here, is 0.1%. We can use our price range right here to show this. We draw from one line to another, and you can see that it's indeed 0.1%. Okay, but what does these numbers actually tell us about the price? Well, here where it says 67.34%, this basically means that during this candle that started right here, it was a 67% chance that the price would go below this level and print a new low. And as you can see, during this candle, we indeed printed a new low, so this indicator predicted the price correctly here. But at the same time, it was a 29.45% chance that the price broke this level. But you can see it was a higher likelihood that the price broke below the 67.34 level. But what you can also see here, you have another line right here where it says 5.69%. This basically means that during this candle we are in right now, which have around 20 seconds to go before the close, it's only a 5% chance that the price closes this 5-minute candle below this level. So it's pretty unlikely that this happens. As you can see, the price closed right here, and now we have new percentages for the next candle. This indicator calculates these levels based on historical analysis. For every candlestick, it looks back at history to see how often the next candlestick made a new high or low based on the color of the previous candlestick. So the algorithm basically calculates how many candles reached these levels in history, and then it displays it as a percentage value on each line. Now let's go up to the settings once again here, because another setting we need to understand, this one is pretty simple, it is the number of lines. So for example, right now we have five lines, but let's say we only want to display 3 values, then we simply change this one to 3, press OK, and now you can see that we only display 3 values here. Alright guys, so now let's take a look at the most important part here. How do we actually use this indicator correctly? And one very useful method is actually to go to a higher time frame. So let's switch from the 5-minute to the 1-hour time frame and take a look at what the probabilities say here on the higher time frame. As you can see, during this 1-hour candle, the indicator predicted with a 67% likelihood that the next candle would be bullish. And as you can see, the candle has already reached this level. So what we can see here is that on the higher time frame, so on the 1-hour time frame, we have a bullish bias. So the longer term momentum is right now to the upside. This means that when we switch back here to the shorter time frame, the time frame we are currently trading on, it makes more sense to trade in that bullish direction. So in this case, it makes more sense to enter some kind of long position right here. But of course, as with all indicators, in order to have a real trading strategy, you want to combine this indicator with other technical variables, and we will of course talk about how to do that later in this video. Another use case from this indicator is regarding your stop loss. You can use the indicator to set your stop loss at levels where the price is very unlikely to reach. So for example, right here, you can see that during this candle, there is only a 1.90% chance that the price will reach all the way down here. So what this basically means is that if you set your stop loss at this level all the way down here, you can see that we do have a stop loss that is very unlikely to be reached, at least during this candle where we are right now. So the second way to use this indicator is to basically use it to get high probability stop levels. So now, and this is super important, how do we use this indicator in our trading strategy? Well, right now as we're speaking, we're looking at oil here on a 5-minute time frame. And as you can see, it looks like we are starting to have an ascending sort of triangle structure developing here. And you can see that the price is trying to break out. And actually, we just recently saw the massive breakout happening live here. So that was amazing to see here. It just happened. But what I wanted to show you guys was that I wanted to show you guys here on the 1 hour time frame, we could actually see that our probability, we had a bullish bias here on the 1 hour. You can see it was up to a 33% chance that we actually reached the level we just recently talked about. You can see this level got just recently reached. So I wanted to show you guys that you could use this time frame here, the longer time frame, to establish the bullish bias, then switch your attention here to the shorter term time frame to take this breakout trade that just recently happened. And you could also, as we talked about earlier, when you enter the long position, so let's say you enter the breakout right here, you could use your stop loss to set it at a level where the price is very unlikely to reach. You can, for example, see that if you set your stop loss down here close to this point right here, there's only a 13% chance that during this candle, this stop loss would have been reached. So as you can see in this trade, you had the probabilities on your side. But alright guys, I really hope you enjoyed this video. If you want to learn about another indicator that automatically detects signals when the price is likely to reverse either to the upside or the downside, I highly recommend you guys to watch this video next.